Hey, what's up, folks? This is a stock market analysis from the team at SellThatOption.com. Let's get right into our spiders here. Interesting day here. We were down basically nothing, down 0.03%. But let's take a look at some things that I think are important to note when we're looking at this chart, okay? Again, we are, for me at least, in a period of lower highs. We are in a period of this death cross really beginning to enact some level of influence on the chart. I would also say that this 9 EMA is also acting as a pretty severe resistance level. You can see that yesterday we had this long wick. We closed at the low of the day. We also see here not necessarily a doji candle. We see a larger body than what is for a doji, but we do see a gap try to challenge, break above this 9 EMA. And at one point, we were up a 1.5% or so on the day. And then we closed basically where we closed yesterday. We did have also a long lower wick as well. And so a lot of volatility again here in the market. We're still watching for an eventual challenge here, I think, on this trend line. Let's get right into the Qs. Again, the S&P 500 was down 0.03%. The Qs were up 0.03%, and you see almost the exact same candle, right? But a primary difference is whereas the 9 EMA was acting as resistance, previously this is acting as support. Okay, so this 9 EMA is acting as support. Low volume too. We're seeing 5 straight days of lower volume. So I also think that's important to note here in the Qs. Let's go to the diamonds. Diamonds was up basically 0.16%. We had a much clearer doji. This chart looks a little more like the S&P 500 without the death cross, but we do see that that doji, that 9 EMA, is acting as resistance here. We were a little bit higher in volume, but we're still declining in volume here on the Dow Jones Industrial Average ETF. Now, perhaps the most interesting of all of our ETFs is the IWM, okay? And you'll see why. Again, one of the things that we always talk about is that the IWM is a leading indice, right? It is largely a leading indice, and although it doesn't always happen, it can give us some level of indication as to where the market's going to go. The IWM was down 1.5% today. Okay, we also didn't see as long of a wick, right? Here's our wick. Then we had a very small lower wick, which means we closed at closer to the low of the day than we did in any of the other indices. Okay, we are challenging, and in fact, I do think this is the lowest close of the year. So even though 4 trading days ago we had our lowest point in the year, I'm pretty sure that this is our lowest close. So we closed here at what, 142.77, and I'm pretty sure we're not going to see, you can just really watch this axis over here to our right, and I just don't think we're going to see a close below 142. Yeah, we don't see a close below 142, right? 142.77. We see the 142.42, but again, that was broken most recently, right? So we do have a new low print, but we also have a new low close on the year. This is important because I think that there is some level of bearishness here, right? We have to acknowledge the fact that this is a bearish move. And so I think that's impactful as to how we consider moving forward in our trading. We have a massive difference now, 8 percentage points, 3.5% or so. No, a little bit more than that, about 6% there of a difference between our 50 SMA and our 200 SMA. Take a look at the VIX. VIX was down. So even though the S&P 500 was down just a little bit, our VIX was also down, which means you can see here our VXX was down 1.66% on the day. Let's get into some premium ETF selling charts. Kind of the bread and butter here. As we go through and we take a look at what's going on in the market, TLT isn't doing what I think many folks thought that it might, and that was to see a really massive move up here with the bearishness in equities. USO was up. I think that we do need to continue to talk about USO here. So we do see USO being up here pretty significantly today, 3.6%, and we're still continuing to challenge, trying to find a base here in oil. XLE didn't necessarily follow suit, only up 0.3 of a percentage point. XOP was down, as was OIH. OIH continues to challenge us with new lows. And so we're really challenging that 16 area. Okay, so we're really challenging that 16 area, but we are certainly in a bear market here in OIH. I also think it's worth talking about XRT here. So we have XRT continuing to see pretty significant. I mean, we've moved 10% in 7 trading days, right? So XRT, our retail ETF, has moved pretty significantly. This line up here, our simple moving average on the 50, has certainly acted as pretty significant resistance after this initial cross, right? After this initial whole moving average cross. Because this is right there. You just can play that 50 simple moving average pretty significantly. And we had a really bearish day here in XRT. We're going to change EWZ real quick. So instead of XOP, we're going to look at XPO, which had an insane day. I think that this is certainly worth looking at. So in the last 2.5 months, we've seen XPO move from a high of 116.27, and we went from basically 73 days ago to 41.05, right? 41.05 as the low of the day. And we do see that we got about 10% back from the low of the day, but we were still down 26% today. 26% on this day is pretty incredible. As we, just think about how tough it is for a pretty major institutional entity to be that far down. It's honestly just incredible. Now let's look at some stocks of interest. We will take a look at Facebook, not really doing anything, but we are coming up off of that low. Amazon is seeing this cross right here, the simple moving average cross the 50 over the 200, and so we are seeing a death cross here in Amazon. We'll see what happens. There's a lot of value here in Amazon. And then we do have Apple. Apple is continuing its downward trend, but we are up about $7 off of the low from 4 trading days ago. All right, so when we think about our futures here, so we go to our Analyze tab. Nope, let's go to our Market Watch tab. When we go to our Market Watch tab here, we do see futures up marginally. We see our VIX down, which is interesting because we're down a percentage point and only up marginally here in our futures. And so definitely something to take a look on. We have seen a number of gaps up. Yeah, so if we go back to these charts, and so I think this is something that is worth considering as we trade. We can just go to the S&P 500. And so let's take a look at each of these last few days after we see this candle here on the 7th. So we close, we gap down, but we end up finishing up on the day. Okay, and so then we gap up and we lose our momentum throughout the day. We gap up and we lose our momentum throughout the day. We gap up and we lost momentum throughout the day. And so that's the general trend right now, is that until the bulls can, sustain a rally, if there are trading opportunities, there is the potential. Again, I'm not a financial advisor, but there is the potential here for actionable trades based on kind of what's going on. And we even see massive gap up and we lose a little bit there. So it's worth noting, it's worth seeing that that's going on. And so when we're taking a look at our futures in our Market Watch tab, and we see that there's, a potential to gap up in the morning, we have to take that into consideration as to what's also been going on in the market. We go to our premium selling ETF charts. We take a look at our IV percentiles. We've lost some level of IV here recently, or at least the percentage-wise. A variety of reasons could be there. But this is where we're at with the markets right now. Not necessarily, not necessarily feeling any particular way about them. We're positioned really, really nicely to take advantage of a move up or a move down in the market, and that's what happens when you sell options. If you have any questions, please feel free to reach out to me at Ryan, RYAN, @SellThatOption.com. Otherwise, we will see you tomorrow.